It's decision time in the stock market as we're preparing to see if the market is getting ready to make the next major leg higher or the next major leg lower. So today we'll look at all of the indices and I'm going to give you exactly what you need to be watching for in the price action. So first up, let's take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today we will be looking at weekly charts, but first I want to do a quick educational session on how you follow price action looking at the daily chart. So just a quick summary of 2023, we had a very strong start and a very bullish rally in January, and now we are starting to give back some of those gains, which is completely normal because anytime you get an impulse, whether it be up or down, you are usually going to be due for a counter trend move before you continue that trend. And I gave you 3 critical support levels to pay attention to, and we are at the last and final support level. So I want to go over a quick educational lesson on what it means to follow price action. Remember, we are traders and not cheerleaders, and we do not care which direction the market is moving because we are going to trade in the direction of the trend. So we don't care if the trend is up or down, we only care that we can identify it, and we only care that we're on the correct side of the trend. So when you look at a daily chart of SPY, you can see in the short term, we did have a lower low breakdown after a lower high once we broke down below that critical support at SPY 407. Remember, SPY 407 was our first critical support level, so as soon as we broke down below that, we instantly follow the price action to the next leg lower, which was the next critical support at SPY 400. We broke SPY 400 very quickly, so then the next critical support below that was 393, and you can see after a 2-day bounce back above 400 as a little bit of a head fake, we did get rejected and then reached the next critical target lower just above 393. So we had 3 critical supports at 407, 400, and 393. And we follow the price action, meaning once one breaks, we look for the next leg lower and we continue to follow that trend. So now we are at the point in the market where if we break down below 393, we no longer have the bull trend and we only have the downtrend. The current situation of the market is a short-term downtrend within a medium-term uptrend as long as we can bounce off of the final critical support at 393. So there's no cheerleading of which side is going to win this battle because we're only letting the price action do all the talking. We could not care less which direction it goes. We just need to be prepared to be on the right side of the trade. So a lot of you are still being cheerleaders of which direction you want the market to go, and there's really no point in doing that. If you are following this channel, you should be focused on price action and trend because that's the only things I teach and that's the only things I analyze. So from here, we will switch over to the weekly charts, but I want you to understand if you are trading price action, you need to let the price action do all of the talking, and you need to trade what the market is giving you and not trying to force your will upon the market. All right, let's switch over to the weekly chart of SPX, and we can see on the weekly chart, we are also at the very critical support, which defines the medium-term bull trend because we did get the higher low off of the 3800s and then the higher high breakout above 4080. So now that we have the higher high, higher low, we need to hold on to it, which means we need to start bouncing above this positively sloping 20 weekly moving average, which is also that daily 200 moving average that we need to bounce for critical support. If we don't bounce from here, it's a very quick trip back down to the lows at 3800. So it's a very simple price action triggered actionable trade plan that if we break down below this support, we're likely going for that next leg lower. Now, a lot of you still don't think there is any possibility we can bounce off this support, and I think that is a very rookie mistake because anytime the market is at a decision point and an inflection point of where it can go either direction, there's obviously always the possibility it goes either direction. So yes, there is a very good chance we lose support and go down to 3800 because of the economic situation. A lot of people are talking about the high inflation and everything the Fed has to do, but do not forget the market is forward looking and it could see something out in the future that causes it to want to bounce off this support and still go try to make another higher high. That is why I tell you let the price action do all the talking, because if you're only looking at some type of bias that we must go lower and we start to bounce off this support, you are going to completely miss the next rally. So we'll let the price action do all of the talking, and we know the trade plan revolves around this very critical support. So there's really no point in guessing what's going to happen. We're going to let the price action tell us. So if we start to bounce early in the week, we're looking for the bullish scenario. And if we start to break down support early in the week, we're obviously looking for the bearish scenario. And we are sitting right on top of the critical risk level. I always tell you, anytime you are sitting on top of a risk level, it is usually going to favor the side of the trade that has the least amount of risk. And right now, that is the bulls. If the bulls buy at this risk level, they have very little risk and they're going to instantly know if they're wrong. But if you are a bear trying to short at support, by the time you realize that we're bouncing and going higher, you're already losing a lot of money. So very early in the week, I expect to see the bulls coming out of the gate and trying to charge to higher prices. And we're going to see if the bears are able to fade that rally and break down through critical support. And then we instantly know we're going to lower prices. On the NASDAQ 100 NDX weekly chart, we can see we're coming back down to the critical double bottom neckline. And this is the very critical support level that needs to hold to go hit the 13,000 price targets. If we're going to get this double bottom bounce, we need to hold right here at this critical support, and that is the exact same situation we find in the SP 500. Another thing I want you to pay attention to is the weekly 20 simple moving average has not had a positive slope for the entire year of 2022. And we do now have a positive slope on the 20 weekly moving average. These are very subtle keys that the trend could be shifting, and that is exactly what we're seeing in the price action. If we start to bounce from here, we are going to higher prices, and we are going to have the support of the rising weekly moving averages, so do keep that in mind. On the Dow Jones weekly chart, we can see that we're at a very critical inflection point, which is exactly what we're seeing in the other indices, because we are starting to get a breakdown outside of this bull flag look. Anytime you get a bull flag, that does not guarantee you have to break out to the upside, and that is why we watch the critical support to the downside. If we break out of this flag, it does mean we could come all the way back and retest the breakout of the resistance trend line, which would take us to a lot lower prices. So you need to be risk off in the Dow Jones until we can get back above this level right around 32,920. It's okay to get risk off knowing you can get right back in if we reclaim that level. And just like the SPX, we're sitting right on top of critical support, so we instantly know we're going lower if we break down below it. So just let the price action guide you, but you can see all of the indices are at very important decision points, and we're going to see very soon which direction this market wants to go. On the Russell 2000 weekly chart, we can see the same exact story of weekly higher highs and higher lows, and we are right back down to the neckline breakout, which is right around 1890. And this is the level the bulls need to make a stand from. If the bulls cannot bounce it here, we could come all the way back down to the rising 200 weekly moving average or the support trend line. So there is going to be instantly more risk off behavior in the market if we start losing these support levels. Remember though, if we bounce, that means we could go for weekly higher highs that could take us out into April. On the VIX weekly chart, we can see the VIX was trying to break out, but we keep seeing the VIX getting crushed, but it is still trading above 20, so you still need to be cautious. You could see from the weekly moving averages, the VIX has been going into a downtrend with the negatively sloping 20 weekly moving average, which does give it a chance that the VIX does start crushing back down below 20. However, VIX above 20 is always a volatile market, which usually does favor a bear market. So just be cautious while the VIX is above 20, especially if we break down through critical support levels. On the Bitcoin weekly chart, we can see Bitcoin is trying to break out of the resistance bear market trend line, and we did backtest that level as support and bounce, but now we're finding resistance at the weekly 200 moving average and the weekly 50 EMA. So there is going to be a very critical resistance level in Bitcoin to break above 25,000, and then we should start to run to $30,000 next. If we cannot break above 25,000, there is no reason to be bullish in Bitcoin, and it does mean we could be coming back down towards this zone around 20,000. And then finally, we'll look at the dollar, because a lot of you like to talk about the dollar, but we already know the critical support in the SP 500, and you're seeing the same exact thing in the dollar. We're approaching critical resistance at the negatively sloping 20 weekly moving average, which is exactly where we see the S&P 500 sitting at critical support with a rising 20 weekly moving average. So you can follow the dollar if you want, but you're already getting all the price action you need to trade from the S&P 500 chart. You're either going to see the S&P 500 breaking through support as the dollar breaks above resistance, or the S&P 500 bouncing off support as the dollar rejects from resistance. So you don't need to look at the dollar. I know a lot of you like to, but you're going to see the same exact chart just in the inverse. So jumping back over to the S&P 500, this is a very critical week, and the price action is going to do all of the talking for you as long as you know the critical levels. I gave the lesson on how to follow price action early in the video, so there's no cheerleading. Have a trade plan, know both scenarios, and make sure you're ready to act. Trading always comes down to following the current trend and managing your risk accordingly, because if you can't manage risk, you're never going to be profitable. You can afford a lot of small losses if your wins are very large, so focus on making your losses smaller and letting your runners run to make you lots of profits, and then you don't even need to win more than 50% of your trades to be a profitable trader. It's always going to come back to risk management and following price action, and if you follow price action and you're doing it correctly, you should have no bias and you should have no cheerleading, because you're strictly focused on being on the right side of the trade. If you want to come join a community of price action traders, consider joining the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis, and you can trade with the community. You can find out how to join the Stocks Channel Trading Discord by clicking on the link below. I also have a trade alert service called Bank Trade Alerts that sends you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join Bank by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.